Okay, good morning, folks. Good morning. Good morning. Hopefully, we are coming through okay. 10 o'clock here in London. We are 9 p.m. out in Sydney and Melbourne, Australia. Hopefully, you're doing well. Just making sure we're coming through okay. Someone give me a thumbs up. Make sure you can hear me okay. I don't want to be talking to myself. I do live with a house full of women here, so I spend most of my time talking to myself. But it'd be nice to know if we're coming through loud and clear. Someone can give me a thumbs up. And so, yeah, delighted to be back here on the trade zone here with Eightcap. Delighted to be invited back. As you know, if you were following us last year, we do this every month, basically a Monday and a Wednesday. Where we present. You have guest speakers throughout the year, basically showing their views on the markets, basically how we view the market, what we think is pertinent, how we trade the market. So it's a great insight for you to basically see how it's done from market professionals. And I'm super honored to be invited here back again. I think the last time I did it was from, you may recall, was from my place out in Thailand, which went down quite well. Now back in cold old London, but it's good to be back. So I'm going to be doing this for the month of February. Of course, not quite February, a couple of days to go, but I'll be doing this basically for the month of February. So on a Monday and a Wednesday at this time, we'll be coming on presenting. Now, if you do miss any of them for whatever reason, I know time zones, work commitments and so forth. If you do miss them for any reason, then of course, you can always watch on catch up as well. You just need to subscribe to the Eightcap YouTube channel. And of course, if you hit that bell notification, subscribe, of course, hit that bell notification the moment that the new video or the new presentation has been launched, you'll get a notification so you can watch it in your own time. But it's great to join us live if you can, because then, of course, you can ask questions. You can basically interact with us in real time, because, as I say, this is a live event. So if you are listening in, to make this a bit more inclusive, maybe you can let me know where you are listening in from all around the world. I know I am beaming around the world at the moment. Let me know where you are tuning in from. If you can, it would be also nice to know the level of experience that you have in the markets. Because obviously we want to make sure that over the next year or so, the month, that we're pitching this at the right level. Everyone's at different levels of experience, of course, depending on their trading journey. So give us a bit of an insight to who we're pitching to. So you can basically say John from Calcutta or wherever you are in the world. It will be much appreciated. Okay, so you have, I'm kicking off this week or this month with, I think, one of the busiest weeks that we can have in terms of the fundamental news that's coming out of the markets. Okay, I'm going to go through that now briefly. So I'll basically go through the economic calendar, talking about the big news events that we will be focusing on, and then we'll jump onto the charts and we'll look at some sort of trade setups and biases that I'm currently having in the markets. Now, as you know, if you're trading the markets, there's basically two ways that you can make your financial decisions. You can either, you can use maybe both, but you can either use the fundamental news and the fundamental analysis and technical analysis. Now, typically, I am a technical trader, so I look at charts. That's basically the look back in history on charts, see what price has done in the past, to give us clues where prices may go in the future. But my trading does have an element of fundamental analysis as well. I always want to know what's driving the markets. I always want to know any big news events that are coming out in the week ahead. Now, typically I would do this on a Sunday afternoon when my house is all quiet and they're off doing the things. I get onto my office and I basically plan out my week ahead, looking at the fundamental news and things that I should be aware of. Also, as a trader, I do like to keep abreast of what is going on in the economy. After all, I am a trader. I've been trading for over, since I left school. So that's over 35 years ago now. Golly gosh. For those that do know me or don't know me, I spent most of my trading career in the city of London, in the futures pits. So I was a futures trader. You can see my colored jackets there behind me. I was there shouting, screaming, spent 20 years basically in the trading pits, basically just buying and selling. But now I'm on the screens here. I like to use the fundamental as a sort of a backbone to what I do. So it's very important that we keep abreast of what is going on. Now, there are different economic calendars that you can use to get your news. Now, I understand that Eightcap are about to launch their own economic calendar. I've been advised that next week, as of next week, you'll be able to access this really powerful, far superior economic calendar. So make sure you tune in for that, or follow the links on the Eightcap. If you're members of Eightcap already, then you'll immediately see that or get notified of that on email and so forth. But a great new economic calendar coming out from Eightcap as well. I'm super excited to see that as well. City Traders, that's where I work now. We do work with Eightcap in a number of ways. We do run a prop firm, which is basically an Eightcap partnership. So I'm looking forward to seeing that economic calendar as well. Maybe our team, our prop traders will be looking at that as well. In the meantime, I'm just going to pull up basically I would say the most widely used economic calendar outside of the sort of the homegrown ones that you'll see next week, and that's Forex Factory. It's not a bad one. A lot of the traders use it these days. I do think it's it's pretty inclusive. The correct way to read these, by the way, if you've never seen one of these before, it basically gives you the day and it gives you the time zone pertinent to where you are on the planet. So, of course, I've set mine to the UK London time, but of course, if you're out there in Australia, then you would set that just basically if you go up here and you just set your time zones up there. But here we are at the moment. Actually, it's 8:23. I'm not 8:23 at the moment. I'm now. Where is that? So yeah. So basically, you can set your time zones up there. Right. Okay. So, and another thing to note here is if you're unfamiliar with what a data release is actually all about, what it's going to, the potential impact on the market, you can just click on this little folder here, and it actually tells you a little bit about what the news release is. Okay, so if you don't know what China non-manufacturing is all about, well, it tells you here exactly what it's all about, and it tells you basically how a release could impact the market. So a bit of education in there as well. Retail sales, for example, we all know what retail sales is. It's the retail price, retail sales. It's basically telling you how much is being sold there on the high street. Right. Okay. So without further ado, let's go through the economic calendar. As I say, there's a whole bunch going on this week. It's all to do with central banks, basically. What's driving the currency markets, as we know, is basically interest rates. Okay. Interest rates are the driver of currency markets, and interest rates move in conjunction with the central bank. The central bank moves interest rates to basically, well, they've got two mandates generally. Their two mandates are one, to control inflation. Seems a bit bizarre at the moment. But inflation, they are mandated generally to keep inflation around the 2%. And dual mandates basically mean they are mandated to get employment down to maximum level. So maximum employment in an economy. Okay. So we will be seeing three central banks this week. Okay, the central banks are in an absolute horrid time they've had for the last year. They've had a horrid time basically because of the rampant inflation that we've seen. Across, let me just close that down. Sorry, the rampant inflation that we've seen across the developed world. Okay, I think inflation peaked at the US. In fact, the US inflation. This is a chart showing US inflation. So this is January 2022, 7.5. Remember, they're mandated to keep inflation at 2%. 7.5 January, it moved all the way up to 9.1 in June of last year. And since then, it's been on the decline. Now, one of the ways that the central bank controls inflation is by moving interest rates. So basically, to stem more spending, they put up the cost of borrowing. Yeah, it encourages people to save more money because interest rates are going up. It also stops people borrowing more money, not putting money on a credit card because interest rates are going up. So it basically curbs spending, which in turn should affect inflation. And the way that central banks have been operating is they've been moving interest rates. Now, the US have been moving interest rates pretty much like in fact, all of the developed world have been moving interest rates higher over the last year. But it looks as though we may be coming to the end of this rate hiking cycle. 3 central banks report this week. Okay, let's just have a quick look through the calendar and I'll show you exactly what the markets are going for. Okay, before we have Wednesday when it all starts kicking off, we do have Canadian GDP, Canadian gross domestic product, coming in for up 2%. Interesting to see what's going on in Canada. They raised their interest rates. If you watched it last week, they moved their interest rates last week and they pretty much said, that's it now. We've raised interest rates 8 times in the last year, now up at 4.5% interest rates. And they're saying they're going to hang back now, no more hikes until they see the impact. Looking at the numbers like the GDP and so forth, very, very important in ascertaining the growth of a particular country's economy. It basically is the state of the economy. Now, if the economy is growing less than they expected, that basically means that interest rates will be downward pressure on obviously inflation and downward pressure on interest rates. So if this number comes in line, you can expect to see the Canadian dollar maybe come into some resistance. There's not going to be a huge amount of buying in the Canadian dollar if the GDP numbers come in less than expected. So we keep an eye on GDP numbers. If it's red, by the way, red level here, then that basically means it's high impact news. It's likely to have a good high impact on the markets. Then we got consumer confidence out of the US. We love a consumer confidence. Basically shows us how confident the consumer is. New Zealand unemployment coming out, which will be obviously 9:45 in New Zealand, and that is going to be. Let me just excuse me a moment. Let me just change my clock. There we go, to 10:15. So we're on top of that. My clock was not updating, so it's now 10:15. So these times now are going to be correct. So New Zealand employment is going to be 9:45 out there in New Zealand. Now that's important. It's highly expected that the RBNZ are going to move their interest rates in February by another 50 basis points. Okay, if employment is higher than expected, i.e. basically the unemployment comes down. If unemployment comes down, that basically means more people have work. And if more people have work, it basically means inflation's edging up. So we look at the unemployment to give us a clue where the New Zealand dollar will go as well. Again, if you're trading the New Zealand dollar, you need to know about this before you start taking on big positions. You need to know that this data is coming out because you're likely to see a big move in the Kiwi over that announcement. Not knowing this information could end up costing you. Basically, it's like flying blind not knowing this information. We've got a lot of PMI data out of the Eurozone on Wednesday. Now, Forex Factory here put PMI data here at like a not so high impact. It's got a low impact. I've never agreed with that, quite frankly. PMI data, central bankers love a PMI data because it's a forward-looking indicator. It's basically a survey giving you a clue of where the business owners and the industry is sort of looking going forward. Are they employing more staff? Are they investing in machinery? It's a forward-looking indicator. It's been important. Keep an eye on it. Anything above 50% is an economy that's expanding. Anything below 50% is an economy that is deemed to be contracting. So there we go. And you've got German manufacturing PMI down at 47, so still contracting down there in the Eurozone. Okay, most probably expected with the interest rate hike cycle that we're in at the moment. And then we've got remember the Fed are meeting. They start their meeting and they start their meeting today. It's a 2-day meeting and it concludes on Wednesday. But while they're meeting, you have these job numbers that are coming out. You've got the US ADP non-farm employment, normally precedes non-farm payroll, which is at the end of the week. And you've got the JOLTS numbers as well. Big data out of the US that the Fed presidents will see in their decision-making, before their decision-making, okay, which happens to be at 7 o'clock on 7 o'clock on Wednesday evening, London time. 7 o'clock London time is basically 6 a.m. Sydney time, and that will be 2 in the afternoon in New York. I hope I've got that right. I'm sure I have. So basically, yeah, it's going to be 6 a.m. On Thursday morning if you're in Australia. Okay, so and they're expected to move interest rates by 25 basis points, pretty much in the market. I just want to show you a very quick tool that I always use. This is absolutely free to anyone that wants to use it. A lot of the analysts use it. It's basically the Fed Watch on the CME group. It basically is an indication of what the futures market is expecting in terms of interest rates. At the moment, you'll see interest rates at 4.25 to 4.5. The next meeting, 1st of February, that's Wednesday, they're expecting a 99% chance of 25% basis point rise. 25, it's in the market. It's done. It's done. It will not be anything that, he says. So we're expecting a 25 basis point rise. But with all these central bank decisions, is what they say afterwards. Is this going to be the end of the rate hiking cycle for this period? They're going to call it, is it going to be the Fed pause? Now, obviously, us as currency traders, we're looking for this all the time, because the moment they start to pause, well, the next thing we'll be thinking about pivoting, cutting interest rates. And that's what basically the market will be looking at on Wednesday. What is their view going forward? Okay, if you look at the next meeting, which goes out to March, okay, March, they are pricing in 85% chance of a final 25 basis point rise. Then if you go to June, May, then that's pretty much where the markets are expecting the Fed to start pausing. So that basically means we've got 2 more hikes expected out of the US. But again, it's the forward guidance. What are they going to be saying in terms of, are they near to these levels? Now, if you look at the inflation data that's been coming out of the US over the last month or so, it's all been pretty deflationary. As I showed you that chart a moment ago, inflation has been coming down. This is inflation. It is coming down. Everything you're seeing, PPI, CPI, everything is coming down at the moment. The Fed are going to be talking about this. Chances are, I think they're more likely to be, not overly dovish, but also not overly hawkish either. I think the markets at the moment are more dovish maybe than the Fed want to be. The US dollar has been on a steady decline over the last 6-7 months. I think we're at 9-month highs now for the euro dollar. The Japanese yen, 8-month highs against the US dollar. So the US dollar has been in steady decline. We'll look at that when we get up to the charts in a moment. So we've got the FOMC on Wednesday. So keep an eye on that. Thursday's the big day, because Thursday we've got the Bank of England. They're expected to raise their interest rates by 50 basis points, pretty much in the market. If they only rise by 25 basis points, which is possible, look at the voting here. They're going for 7 are going for a 50 basis point rise. 2 are basically going to be going for maybe a lesser rise. So 2 are going for maybe just a 25 basis point rise, and most of them of the 9 are going for the 50 basis point rise. So keep an eye on the pound. It's likely to do 50, could possibly just do 25. The ECB, European Central Bank. I'll just get on with this quickly, and then we'll go on to the charts. ECB, they're expecting another 50 basis point rise. Anyone that's following the ECB will know that the president, Lagarde, she's pretty hawkish. She's been talking about more rate hikes to come. She's actually saying there's going to be a number of 50 basis point rises. So you've got 2 central banks here at the moment. You've got one that's basically aggressively saying we're going to keep on rising, and you've got the Fed that's basically saying maybe not, maybe we're coming to the end of the rate hiking cycle. One of the reasons why the euro dollar is up where it is. So again, it's press conference. See what they say after that actual announcement. It's always the press conference that you need to be paying attention to this day and age, when the forward guidance is pretty clear in what they're actually going to do. And on Friday, we've got the all-important non-farm payroll, biggest event supposedly of the calendar month. It's basically US employment. As you've heard the expression in the past, if USA catches a cold, beg pardon, if US sneezes, the whole world catches a cold. Whatever happens in the US has ramifications around the rest of the markets. Mr. Prasad says, how can we find out what the market is pricing in, like how economic talks on TV? Well, you can hear what the markets are talking. Good question, Raj Neil. Obviously, the markets are talking rates pivoting in the not pivoting, but pausing in the US, and rates going up in the Eurozone. See what's going on in the euro against the dollar at the moment. We're at these 9 months highs around this 109 level. It's pricing it in. It's there. It's pretty much expected. Anything that's deviating from that, we'll see a correction in that. You'll see that in the chart when we get on in a second. So yeah, non-farm payroll going for 193,000, unemployment 3.6 and 9.3. Again, the Fed would have decided their interest rate policy for this month before this comes out. So it depends on how important this will be. Mostly not as important as it's been in the past, but certainly we'll be paying attention to that. Okay, so just to your question there, I mean, this is a trading tool that I use. This is on the Eightcap platform here at the moment. This is my trading assessment account. I'm doing a prop assessment account to prove how we can get people to pass these prop assessment accounts. I'm using the Eightcap platform, of course. This here tells me exactly where the money is flowing in the currency markets, Rajnil. Okay, so it basically tells me what currencies are strong and what currencies are weak. And if you look here, okay, this is the daily level now. So, and I'm looking back 60 days. So 60 days ago, all these currencies started at 0. And here we are today at the far right of the screen. Okay. And you're seeing the green line here shows me that the US dollar is the softest, the weakest currency against this basket of 8 currencies in here. Okay. And you'll see in here, you've got the Japanese yen. The Japanese yen has been the strongest currency. This is the last 60 look back days. Okay. And you see the euro in there. It's the second strongest currency. Okay. And you take that down to the 4-hour chart. You'll see the euro now pushing up on the meter. And in fact, if you look at interest rates in the moment, we'll look at that and you'll see that the euro yields are pushing up and US yields are pushing lower. So I always use this. And as a trend follower, I like to buy the strong currencies and sell the weak currencies. As a trader, ultimately, all we are doing is looking for an edge, the slightest edge in the markets. Yeah, you can toss the coin. You'll be right 50% of the time over a large sample of tosses. I think as traders, we can do better than a coin toss. Marginally better than a coin toss, and you're making money. Well, my edge is if I want to follow trends, I want to buy the currencies that are being bought. I want to sell the currencies that are being that are being sold. It's as simple as that. Of course, you're going to have losing trades. You're going to have a bunch of losing trades, but you're going to have a whole bunch of winning trades. But the edge will play out over time. I know it sounds simple, but that's all we're trying to do here as traders. All I try to teach when I'm coming in to the markets. Now you can access that trading tool on the Eightcap platform. You can you can send us an email, reach out to us here at Eightcap as well, and I'll send that to you. But also there's one I've had coded up here on the TradingView platform as well. It basically shows me the same picture. It basically shows me the weak currencies against the strong currencies. Okay, so at the moment on the daily, just straight to the daily, you see the greenback US dollar is one of the weaker currencies. But look what's happening today. Today, intraday, I'm going down to the 1-hour chart now. If I'm looking to map my day out for the day ahead, and I'm a trend follower, what am I going to be doing? Well, I say, I want to buy the currencies where everyone else is buying. I'm not trying to buck the trend. I'm not trying to fight the wave. I'm not trying to stand in front of the freight train. I want to do what everyone else is doing. I want to do what the institutions are doing. I want to buy what they're buying, and I want to sell what they're selling. And this tells me today that they're flowing into this blue line here. They're flowing into the euro, and they're moving out of this green line here. They're moving out of the euro. Okay, that's where you want to be looking at. This Canadian dollar. Canadian dollar at the moment is being sold off this week, today. So the Canadian dollar is a currency you don't want to be in this morning. Okay. So let's have a quick look at some of the charts. Oh, by the way, before I do that, let me just show you these yields. Okay. This is the euro yield. Okay. This is the 10-year yield. Basically, it's interest rates. Look what's been going on. It's moved up from 1.96 all the way up to 2.3. Another reason why the euro is getting stronger, because interest rates are edging up. This is leading into the interest rate decision on Thursday. Rates are heading up. That's why the euro is getting stronger. And looking on a technical level, at 2.3, we could get this up to 2.5 without much. Another 0.25% rise in this without too much struggle at all. So the euro is a currency that maybe is a currency we should be looking at taking long. So this is the euro against the dollar. With all my trading, I use the top-down analysis approach. So with all my trading, I like to use the top-down analysis approach. Here we've got the daily chart, okay, of the euro dollar. We've broken through a big level of resistance, okay. Level of resistance. Do you see here? This is the daily. Every time we got up there over, well, what was that? That was from sort of the middle of January. We've got these high wicked candles. Yep. High wicked candles basically tells us that the buyers are taking the currency higher, but then they met with a wave of sellers. Keep pushing it down. Yeah. Pushing it down. This candle here, classic, really bearish momentum candle. But every time we've now pierced this level, we got pushed down. But now in the last week, we've traded above this zone. Okay, so this has now taken out these sellers that were depressing this market down. They've basically gone. So now the path of least resistance for me, the euro is getting stronger, dollar's getting weaker, is to the upside. So I'm expecting this currency pair to trade higher. And of course, if you take that down to the lower time frame charts as well, that's basically where you'd be looking for your entries. Never want to be buying the tops of candles. Always like to be buying the bottom of always like to be buying on a pullback. And I tend to like to use pullbacks into the moving averages. I tend to like to use price action as well. So when you see a pullback and then the pullback becomes less on the second pullback, that basically means that the sellers that are pushing it down are losing momentum, and I would generally like to buy a break of that type of zone there. So this is a typical just price action that you can use to get into this, to get into a trade. So looking for the pullback. Here you see the pullback. If this pulls back and fails to take out the previous low down here, so it comes into around here, then you'd be breaking, so it comes back down to the 108.75 zone, and then another push higher, then you'd be entering at 108.95. So it's basically a bit of pure sort of price action to get into that. But at the moment, the momentum is definitely to the upside. Nice low wicked candles here now. Low wicked candle on the 4 hour, indicating that we're going to push higher. Markets are clearly going to be looking at the 110 zone. So we're looking at 110 for potentially trading high. So the euro is looking strong. This against the US dollar. Also looking here at the euro against the CAD. You saw there on the momentum meter that the euro, so the CAD was particularly weak. Okay, this has pulled back to the 4 hour now. CAD's weak, remember. Euro is looking strong. Look at this pullback. This pullback failed to take out the previous low, indicates now that the buyers on the pullback are more prevalent, taking this to potentially, to re-challenge the double top that we had resistance shown before at 146.35. So at the moment, when you've got a weaker CAD and a stronger euro, for trend continuation, most probably takes it high at the moment. Path of least resistance, I would say, would be to the downside. Last week, we were looking at this on a longer term trade. Okay. And I will say this, sometimes, you have to look at the bigger picture. One of the strategies I teach inside our trading room is a big reversal strategy. Big reversal, looking for the key turning points. And I was highlighting last week, and I still would, say this is a valid reversal strategy. The price action you saw at this level of resistance, was building a case for a pushback lower. Intraday basis, this is being met with demand zone. So at the moment, although this is sort of a bearish and a push back down to sort of 42.5 was on the cards, this pullback you're seeing now in this week, when you're seeing potential for hawkish Eurozone, a triple top challenge is most probably likely, which we'll see the naked traders getting stopped out there at the moment. Ranjil says, do you think the euro dollar is overextended, and how can we know if the price that is moving up will keep going? Well, good question. But of course we don't know. We don't know what will happen. All we can do is look at the charts to give us projections, to give us clues of what we think. There's an indicator out there called the RSI, isn't it? And it's always saying how it's overbought, oversold, and what have you. And trend followers, will often say, "Oh, this is the top. This is the top." I don't predict that, Rajil. This is overextended. I've never really been a big fan of that. I think it was famous economist John Maynard Keynes that once said that markets can remain irrational for longer than you can remain solvent. Maybe so, but I'm going with where it's going. I'm not trying to predict the turning point unless I see price action at key levels of resistance, and I don't see that at the moment in the euro dollar. It is a good question. I use technical analysis to tell me when I'm selling, and typically my technical analysis will be in the form of bearish price action at level of resistance. Okay, you had one here. Okay, you had one here. This bearish pin in here with my crosshairs. It was a bearish pin at resistance. Yeah, you can drag right out to, the the February last year. Okay, we had this swing low. Okay, and then we had this price action that was the top of this big move down, all the way down to 0.95. Massive move, 15% drop in the euro against the dollar strength as dollars started moving their interest rates up. Yeah, it's a big level. On a daily level, on a daily point, on a daily, on a daily chart, this pin bar in here that we saw last week was a clue that this level has been respected. I wouldn't have been saying you're wrong at all to take a short trade on that last week, but it's been trumped now. It's been superseded with the bullish price action. So for me, no. I think, looking at the charts, again, the next level where you may see some resistance coming in would be, I would say, at around that zone there, around the 110. And more likely, a break of that will see this zone up here tested. Remember, I'm a technical trader. I'm looking for the technicals. If the big players are buying it, I'm buying it. I'm not trying to predict what they're going to do. If they're buying it, I'm buying it. If they're selling it, I'm selling it. Okay. 111.50 is the next level to the upside. Okay. So are we going to see, do you think, inflation re-emerge in the US? Well, if it emerges in the US, it's going to re-emerge in the Eurozone as well. Yeah. And there's possible that that's going to happen. I mean, China's opening up at the moment, as we know. That is going to be inflationary. That is going to be inflationary. You may see the inflation re-emerge, and you may see it in the Eurozone as well. It's going to happen to both. In terms of the technicals, momentum is clearly to the upside. I just checking to make sure I'm okay for time here. So the euro against the dollar, I think to the upside. One I was looking at last week, and it's still an interesting currency pair. I'll talk to you about my naked trading setup. The reason I call it naked, by the way, just in case you're listening and want to know what I'm talking about, is basically because I remove all the indicators. The only thing I use on the naked strategy that I teach is pure price action. Pin bars, engulfing patterns at levels of resistance and at levels of support. I'm looking at this one here. Okay, so this is a level of resistance. Level of resistance puts in this big bearish pattern. It shows me that the big players are respecting this. When you see that, that is an indication that this wants to reverse back on itself. It shows you that that level of resistance or support has been respected. That's when you'll see institution money coming in, selling it at the base of that candle. The stops above is often a strategy that, when it works, can really deliver some powerful, good risk-reward trades. As I say, it's one of the strategies I teach inside the room. I'm told that I'm overextended my time here. So it did fly by. Monday's are always going to be a little bit like that, especially this week, because we've got so much of the fundamental news that you need to be aware of. So I'll just go through that with you. Wednesday, we'll much more getting into the charts. I'll talk a little bit about the FOMC, which is coming up. But again, it's just going to be coming up. So we'll get on the charts and I'll show you some other price action ideas that I'm looking at. As I say, euro is looking reasonably strong at the moment. Dollar's looking reasonably weak. We'll see how that plays out over the next few days or so. As I said, my name is Andrew Lockwood. I do run the City Traders. I set up this a while ago. You can come and join me, of course, if you wish to, at the City Traders. There we go, citytraders.com website. As I said, I'm also running we run a prop firm, which basically means we fund traders with real cash, courtesy of Eightcap. If you want to take part in that, head over to the City Traders as well, and you can take out an assessment. You get an instant trial account with Eightcap. You pass the assessment, you get live money. We'll fund you, and that's giving you a chance to trade serious amounts of money. We start off from 12,500. We fund all the way up to $500,000 as well. Okay, Ranjil. Yep, the yen. We were going to touch on the yen, but running out a little bit out of time at the moment. The yen has been plagued by the Bank of Japan playing with its yield curve. Are they lifting? Are they not lifting? We've got lots to talk about with Crudo on that front at the moment. The Japanese yen is still looking like a strong currency and is likely to benefit from a weaker dollar this week. So dollar yen at this key important level, most people will act as resistance from here. But more about that on Wednesday. Thanks all for tuning in today. If you want to watch it on catch up, you can do so. Go over to the Eightcap YouTube channel, share it with your friends as well, and subscribe to the channel, of course, if you don't already do so. That notification bell will let you know when we do send out the next one. Thanks indeed. Have a good week. Lots to play for this week.